Hello everyone and welcome back to TradeSmart. Have you heard about ChatGPT? If not, this is an amazing AI tool that can answer your questions, write program codes and much more. But can it give me useful ideas for trading? I put ChatGPT to the test by asking it for the best trading strategy, but it couldn't give me a clear answer because it can't provide any financial advice. So I asked it what are the most popular trading indicators out there, and it answered RSI, MACD and ATR. I decided to put together a strategy using these indicators and optimized it for the British pound versus Japanese yen 1-hour chart. I did the optimization between 2015 and 2019. And guess what? The results were absolutely amazing. But that's not all. I wanted to see if this strategy works on other markets also, so I tested the strategy on 51 different cryptocurrency pairs, and 45 out of the 51 were profitable. In today's video, I will show you how to set up the strategy on your chart, how to identify trading signals, and how to execute trades. Plus, I will show you how to set up the strategy as a trading bot using our multi-entry Tier 2 premium script. I will also show you the results and which assets were the most profitable. Trust me, you don't want to miss this. Without further ado, let's dive in. Okay, first let's see the chart setup and the rules of the strategy. To set up this strategy, first head over to TradingView and set up a GBPJPY 1-hour chart. Once you got that, open up the Indicators tab and let's add our indicators. The first recommendation by ChatGPT was the MACD or Moving Average Convergence Divergence. Click on this one. This indicator will give us our entry signals. The second recommendation was the RSI or Relative Strength Index. Add this one to your chart. This indicator is usually used as a filter indicator. So most of the times we don't want to enter into a position when the price is overextended into either direction. This indicator is intended to show when the price is oversold. That happens when the indicator's line goes under this 30 level. And we don't want to enter into a short position when the strategy is oversold. And we don't want to enter into a long position when the strategy is overbought. And that's when this purple RSI line goes above the 70 level. But what I came up with and worked perfectly is to do exactly the opposite. But I will show you that later. Now let's move on with our indicators. Third indicator which was recommended by ChatGPT is the ATR. So type in an NFX ATR and click on this one. This indicator will be used for our take profit and stop loss placements. And the last indicator which ChatGPT recommended was the moving average. I decided to use a simple moving average, so just type in moving average and click on this one. Moving averages are usually used as a trend filter. So generally we don't want to enter into a long position when the price is under the moving average, and we don't want to enter into a short when the price is above the moving average. Simple as that. So now we have our three indicators that were recommended by ChatGPT, but I decided to use a few more indicators. One indicator for a position exit indicator, one volume indicator, and one momentum or direction indicator. So let's add those two. For the position exit indicator, I choose the squeeze momentum. Click on this one. As you can see, this indicator prints green and red bars. When the bars are green, it usually means a bullish momentum, and when they are red, it means a bearish momentum. What I decided to do in case of a long position is to exit the position when the squeeze momentum turns to red, and opposite is true for shorts. Moving on, I decided to use a volume with an exponential moving average. Let's see. So add a simple volume indicator, type in EMA and add moving average exponential. With this volume indicator, I will only allow to enter into any position if the volume bar is above the volume-based EMA. Now follow closely as we are going to set up this volume indicator. First, click on the volume bars and start grabbing it down until the timeline. Once you're there, release it. This way, this volume indicator will be displayed in a different window. Then find the exponential moving average which we added to the chart. It's going to be this one. Do the same, so click on it, start grabbing, and release it when it's on the volume. Okay, now open up the EMA settings, change its length to 10, and change its source to volume. And as you can see now, the EMA moves according to these volume bars. So I decided to only allow entries when the volume is above the volume-based EMA. This means that the volume is higher than usual, and it can indicate that there is a lot of interest in buying or selling an asset. Okay, and finally, let's add our ADX indicator. Type in ADX and click on Average Directional Index. With this indicator, we are going to use an extra moving average too, but now we are going to use the regularized exponential moving average. To add that to the chart, type in REMA and click on this one. Now you can see this line, it is going to be our REMA. Click on it and start pulling it down until you reach the ADX indicator. Now open up its settings and set its length to 5 and change its source to ADX. I know this chart might seem a little messy, but don't worry, we are going to clear this out and I will explain every rule and you will see that this strategy is not that complicated as it looks. Now let's change some parameter settings and then I will explain the strategy rules. Let's start with the ATR. Open up its settings, leave the SL value at 1.5 and change the smoothing to EMA. Then go to the style settings, untick the buy TP, sell TP, main ATR and change the SL line styles to step line. Now you can see these two squared lines. These are going to be our stop loss placements. Moving on, we have the simple moving average. Open up its settings, change its length to 100 and leave everything else as it is. You can change the style if you like. I prefer going with white line, but you can choose any color you want. Moving on, open up the MACD settings and we are changing only one thing, the source of the MACD, which will be HLCC4. This will give you a smoother MACD line, therefore avoid some of the fake crosses. Next up, let's modify the RSI. We are going to change the source here also, but it's not going to be HLCC4. We are going to use HL2, which is basically high price plus low price divided by 2. Also switch to the style settings and untick the RSI based MA as we won't need that. One last thing with this RSI indicator, add the horizontal line on it at the 50 level. Next up, with the squeeze momentum, we don't need to change any settings, so leave it as it is. On the EMA plus volume indicator, we already changed these settings, so we can move on. On the ADX, let's change some settings. So open up its settings, set the ADX smoothing to 5 and the DI length to 5. This will make the ADX line react much faster to the price. I think it might be also a good idea to change its color to white, so it stands out more from the EMA. Click OK. And on the regularized exponential moving average, we have already set up everything we wanted. Okay, now we have all of our indicators set up. Let's make some space so we can see the chart more clearly. On the MACD, we are only interested where the cross-ups and the cross-downs are happening. So basically we don't really need these two lines as the histogram tells us the exact same thing. So when it turns to green, it's basically a cross-up, and when it turns to red, it's a cross-down. Finally, we have some more space so we can see the chart clearer. But now, what are the rules for the strategy? For a valid long position, first we need to see the price moving above the moving average, which you can see right here. Then, what we need to see is a cross-up on the MACD, which is indicated by this color switch on the MACD histogram. The next condition for a long position is that we need to see the RSI moving above the 50 level. And as you can see, it does. After that, we need to see that the volume is above the volume-based EMA. If we zoom on a bit on this indicator, you can see that on the long signal candle, this bar is indeed above that volume-based EMA. And finally, the ADX also needs to agree with this position. Oh, and I forgot to add the two horizontal lines to this indicator too. So find the horizontal line tool and add one line to the 20 level and the other line to the 50 level. So the rule for a valid long entry here is that the ADX line needs to be between these two boundaries, so below the 50 and above the 20. And the ADX line also needs to be above this regularized exponential moving average, which you see right here. And as you can see, it is. So let's mark this valid long entry position and quickly just review the conditions. So price is above the moving average. We got a MACD cross up. The RSI is above the 50 line. The volume is above the volume-based exponential moving average. And the ADX is above the 20 level, below the 50 level, and above the moving average. So all of the conditions are met right on this candle, and we can enter into a long position. Entry level will be at the close of the signal candle or at the open.
After this video, your life is never going to be the same. So I need you to stop whatever you're doing and give me your undivided attention. Okay?
500, 1,000, even 2,000 a day. I love you. Thank you so much.
I can't tell you how good this feels. For the first time in my life, I bought something online and I got way more than my money's worth.
So I just kind of lucked out because a friend of mine had an invitation. He couldn't come, so he gave it to me.
Over $2,300 per day on average. I cannot tell you how good it feels.
$76,000 in 4 months. I was a little skeptical at first, but I'm so glad that I decided to give it a chance. I legit make money in my sleep. You could have kept this technology to yourself, but you didn't. You decided to share it with us.
And the gurus, they just give you a lot of BS. Like, I don't even think they know what they're talking about. I don't even think they make money doing their own thing. I realized right away that he is the real deal. All you do is you get paid. You just get paid. $3,072.
Maybe a friend sent you here or somebody owes you a big favor. I don't know. Doesn't matter. Okay? You're here now. That's what's important. And you're going to get your shot at this new system.
Here's a way to make investing a lot less complicated. Trade just one stock. Sounds pretty basic, right? Well, it may be basic, but it works. This strategy was pioneered by a former hedge fund manager named Larry Benedict. He calls it his one-ticker retirement plan. And in 2 decades of using this strategy, he didn't have a single losing year. Not 1999, not 2008. In fact, in 2008, when the subprime mortgage bubble crushed portfolios, Larry's fund turned a massive $95 million profit. Pretty impressive. This one-ticker retirement strategy is no gimmick either. It has nothing to do with buy and hold. And it flies in the face of everything a financial planner would tell you. But I assure you, it's completely legit. Plus, it's incredibly easy to understand and even easier for everyday folks to follow. And for the first time in his career, Larry is sharing his strategy with the world. He just released a free video where he explains everything you need to know about his one-ticker retirement strategy. In this short video, Larry even does an over-the-shoulder demonstration of his strategy in action. Plus, he gives away the name of his favorite ticker 100% free. This is an incredible opportunity, folks, so you can access Larry's video and demonstration by clicking the link below this video now. Whether you're a fairly experienced investor or a complete amateur, I can guarantee you one thing. You have never seen anything like Larry's one-ticker retirement plan. So if you have a few minutes, I think you'll be glad you've watched Larry's quick demonstration. Go ahead, click the button below right now to watch it for free.
Of the next candle. Stop loss will go to this red ATR line, and the take profit will be a 1 to 2.5 risk to reward ratio. You can see that right here. But there is one more extra rule which you have to keep in mind. We are either going to exit the position once the stop loss gets hit or the take profit gets hit. But we have our squeeze momentum, which is a secondary exit indicator. So if throughout this long position, anywhere the squeeze momentum line would have switched to red, we would have exited the position right there. So if this bar would have been red, we would have closed the position on the next candle's open. Although if the squeeze momentum is already red at the beginning of the trade, so we would have entered into a long position right here, then we are staying in the position until the stop loss or take profit gets hit, or the squeeze momentum turns to green and then turns back to red. Okay, let's find another long example to just review the rules of the strategy. Okay, so on this candle we got a long entry signal candle. For a valid long entry, we need to see the price moving above the moving average, which is true. Then we need to have a MACD cross up, which has happened right here. After that, the RSI needs to be above the 50 level, which you can see is above. Then the volume needs to be above the volume-based DMA, and we have to zoom in a bit to see this. As you can see, the volume is indeed above the moving average, so we are still good to enter. And finally, with the ADX, we need to have the ADX line, which is the white line, above the 20 level, below the 50 level, and the ADX needs to be above the moving average, which is right here. As you can see, all of the conditions are met for a long entry, so we can enter into a long position. Entry level will be at the close of the long signal candle or at the open of the next candle. Stop loss go to the lower NNFX ATR line, and the take profit will be a 1 to 2.5, right around here. As you can see, on the first candle, the take profit level got hit, so this was a winning trade. Okay, now let's see the rules for a short example and then go over the backtest. Our strategy script indicates a valid short position right here. The short signal candle was this one, so I will mark it and explain the rules for a short entry right now. The rules for a short entry is that the price needs to be under the moving average. So as you can see, this candle has closed under the moving average. If I zoom in, you can see it clearer. The next condition is that we need to have a MACD cross down, which happens right here. Then we need to see that the RSI line is below the 50 level, and it is, as you can see. Then the volume needs to be above the volume-based DMA, and as you can see, it's well above. So finally, the ADX needs to agree with this entry, which means that the ADX line needs to be above the 20 level, below the 50 level, and the ADX line, which is the white line, needs to be above the ADX-based moving average. And if I zoom in a bit, you can see that it is above. So all of the conditions are met for a short entry. Now let's set up the position. The entry level will be at the close of the signal candle or at the open of the next candle. The stop loss level will be at the NNFX ATR line, and the take profit will be a 1 to 2.5 risk to reward ratio. Okay, now we can exit the position in three ways. Either the stop loss gets hit, or the take profit gets hit, or the squeeze momentum indicator bars turns from red to green. And as I mentioned earlier, if the squeeze momentum already indicates the opposite, so in this case a bullish signal with these green bars, then we are not going to exit the position. We are going to wait until the squeeze momentum turns red, and if it would have turned back to green, then we would have exited the position. So out of those three position exit scenarios, which one was the first to happen? The stop loss did not get hit, the squeeze momentum did not turn back to green, but our take profit was hit. So the strategy closed the position right here on this candle. Let's see one more short example and then I will go over the backtest. Okay, here you can see a short example. The signal candle was this one, so I mark it with a white line. For a short entry, we need to have the price under the moving average. Then we need to see a cross down on the MACD, which happens right on that candle. After that, the RSI needs to be under the 50 line, and as you can see it is. Then the volume needs to be above the volume-based moving average, and it is well above. And finally, the ADX needs to agree with this entry, so let's see if this does. The ADX line needs to be between the 20 level and the 50 level, and as you can see it is. And it also needs to be above this ADX-based moving average. And all of those conditions are met on this candle, so this is a valid short entry position. Entry level will be at the close of the signal candle or at the open of the next candle. Stop loss at the NNFX ATR line. And a take profit at a 1 to 2.5 risk to reward ratio. Now this is a special example because we didn't hit the stop loss and didn't hit the take profit level. But the position have been closed right on this candle. And that's because the squeeze momentum gave us an exit signal. As you can see on the signal candle, the squeeze momentum was red, which is good, and it stayed red right until this point. On this candle, the squeeze momentum turned green, which means a position exit signal. So the strategy exited at the open of the next candle. I hope everything is clear. If not, make sure to ask me down in the comment section. To set up the strategy as a trading bot, you need to have access to our premium strategy scripts, optimizations, and to our Discord chat. Access to everything do cost some money, $20 per month to be exact, but it's well worth it. These scripts are highly customizable and will be a game changer for you if you've been trading and backtesting manually. Give it a try, you won't be disappointed. If you don't like these tools, you can simply just cancel the subscription. But if you don't want to spend any money, you can still trade the strategy manually. If you want to get access, just head over to our Patreon page, link is down in the description, and become a Smart Trader tier member. Once you are a member, open up our multi-entry Tier 2 premium script and copy-paste the parameter settings of this optimization. The settings are shared in the TradeSmart Discord chat with all the other optimizations. Once you've done that, you can now backtest the strategy on every asset and time frame within seconds. You can modify it for your liking and can set up it as a trading bot. And now I will show you the sped up video of the backtest and then the best performing results. If you like this video, don't forget to drop a like, subscribe and turn on the notification bell so you won't miss any of my upcoming content. If you don't know us or what we do here at TradeSmart, we are backtesting rules-based objective trading strategies 100 times to see which ones are the best and has potential. After we find a good one, we code it into a TradingView trading script and release them to our Patreon members. We also optimize the scripts to bring out the best results while aiming to keep them steadily growing and at a safe risk level. If you become one of our Patreon supporters, you can get access to all of our trading scripts optimizations, and we can also help you set up our trading scripts as a trading bot. Besides that, you can talk to anyone on our team, give suggestions moving forward, and get an insight into our upcoming projects. You can find the link to our Patreon down in the description. And now, let's take a look at the backtest results. After testing the strategy on the GBP/JPY 1-hour chart between 2014 and 2021, risking only 1% per trade, the strategy made 200% net profit after just 600 trades.
Why is it that even though you're watching YouTube or social media videos all day about trading,
strategy had a 1.62 profit factor and a maximum drawdown of only 6.47%? This is a super cautious setup, as my risk tolerance is between 10 to 20% max drawdown. Just imagine what would be the results if we increase the risk per trade to 2 or 3%. We could see net profits up to 600%. And that's not even taking into account the potential gains from using a compounding function. Speaking of compounding, let's take a look at what would have happened if we used it in our backtest. With a 1.5% risk per trade, our strategy would have produced an incredible 1600% net profit in the same time period. Taking a look at the equity curve, you can see that it's steadily growing without any big pullbacks. So I would say that this is a perfect equity curve. But you are probably wondering about the results on the cryptocurrencies. So now let's see the results of the 51 crypto pairs. I already ranked the results based on profit factor. The position sizing is the same as the original backtest, so non-compounding, 1% risk per trade, and the backtest results are based on the last 3 years of price data. On the top we have the best performing ones and on the bottom the worst ones. The top performer was SNX USDT with a 79% net profit and a profit factor of 1.6. Then we have Solana, Cake, Link and Algorand. All of these cryptos have a profit factor above 1.4, which is very promising. Here you can see the top 4 best performers equity curve. The worst performers, which were losing ones, are the Dash, ETC, 1inch, LRC, Comp and Algo USDT pairs. As you might know, I am not a financial advisor and this is not financial advice, but in my opinion this seems to be a robust strategy that has proven to be profitable in multiple markets. Always remember, past performance never guarantees future results. The market is constantly changing, so it's very important to do your own research and not rely solely on this strategy. And with that said, as always, thank you all for watching and be sure to like, subscribe if you found this video helpful.